Welcome to Market Snapshot from the InCred Equities desk. In this podcast, our expert from the equities research team helps you navigate the stock markets with a quick roundup on the previous day's closing, along with relevant insights. Whether you are an experienced investor or starting out, this podcast will equip you to take informed decisions.
Good morning, everyone. Nifty has been moving in line with expectations. I've been saying that play Nifty for a bounce. We gave up a bounce expectation around 23,900. It moved towards 24,400, and from there we witnessed some of profit booking sort of coming in. It was a very intense session yesterday. Extreme negativity that was seen, especially on Nifty. Bank Nifty was weak, but Bank Nifty was extremely weak yesterday, along with market breadth. Nifty closed around 24,200 near the low point of the day, almost 300 points down. The immediate supports lie at 24,150 spot. An hourly close below 24,150 can result in a fall towards 24,000, 20,800. And this would again mean that the continuation of the fall that has happened, and it may not stop at 23,800 again. It may then slip towards its 200 DMA, which is around 23,500. However, we expect a bounce back. On hourly charts, we're not seeing RSI falling in tandem with how the price movement has been. And in absence of weak global cues, we may not fall that much. Then yesterday, there were no negative global cues. Asian markets were positive. US markets had closed on an extremely positive note, but we had a very weak session. And if you see, US markets have been making new highs, whereas we are witnessing good correction. And that is going to be the case for a while now. Even US market is expected to witness correction. The event is now over, and now the actual momentum is likely to unfold. The way the momentum indicators were showing the extreme zones on monthly charts for the Nifty, similar is the chart for S&P and Nasdaq as well, meaning that there is going to be a correction in a month or two in US markets. At that point in time, we may not fall that much because we would have fallen already, and we may see more of a time correction, as I've been saying that this is not going to be only price correction, it is going to be time plus price correction. GIFT Nifty is pointing towards 30 points upside as we speak. Any declines towards 24,200, 24,170. Risk takers can buy, keeping stop loss of 24,150 spot. On a 5-minute closing basis, Nifty can go towards 24,400 again. The risk reward is favorable, but one needs to be very stringent in terms of stop loss. Money management, risk management has to be of paramount importance. FIs actually sold around 4,900 crores worth in cash. Domestic bought around 1,800 crores worth in cash. So the story continues wherein the FIs are selling aggressively. This reallocation we have talked about on multiple occasions. We have talked about this rationale. Nobody can know the exact reason, but what we can try to do is decipher the reasons for FIs selling the Indian markets continuously. Yesterday being a weekly expiry, we had a much weaker session. Today, we might see a temporary bounce back sort of coming in. And Indian markets yesterday closed in a very weak note. There was absolutely no recovery, not even 20-point recovery. And that makes 24,150 a very crucial level. So be very cognizant of this fact. An hourly close below this is going to be quite detrimental on a very short-term basis as well, and we may step lower. Apart from dollar index, other things are still stable. Bullion has corrected, and that is what generally happens when your dollar index goes up very strong. It has inverse correlation with bullion markets, and they have seen correction. Why I would not comment in bullion markets at this point in time, because they had seen a very strong upside, and these small corrections actually do not matter much. That will be all from my side. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.